Alright, let's start with the headline numbers because they paint a compelling picture of momentum converging from multiple directions. SUI's total value locked just officially reclaimed the $1 billion mark. Now TVL alone doesn't tell the complete story, but crossing psychological milestones like 1 billion signals ecosystem maturity and capital confidence. Money flows to where opportunity concentrates, and crossing back above $1 billion after previous drawdowns demonstrates resilience. Looking at price action, SUI rose 1.72% in the last 24 hours. That might seem modest, but context matters. It's outperforming both its 7-day trend, which shows negative 2.24%, and dramatically outperforming its 30-day trend of negative 40.73%. When an asset starts decoupling positively from its recent negative trends, that often signals momentum shift and accumulation. Multiple catalysts are driving this convergence. First, institutional product launches. Grayscale just debuted an OTCQX-listed SUI trust with futures capabilities. For those unfamiliar with Grayscale's significance, they manage billions in digital assets and provide regulated exposure for institutional investors and accredited individuals who can't or won't directly hold crypto. When Grayscale launches a trust for a specific asset, they're signaling institutional demand exists, and they've completed extensive due diligence on custody, regulatory compliance, and market structure. This isn't speculative venture capital, this is regulated financial product infrastructure. So, the second catalyst is real-world asset adoption. The R25 Protocol has launched rcUSD and rcUSDp tokens, and these tokens explicitly bridge traditional finance and DeFi on SUI. Real-world assets honestly represent one of the most significant narratives for institutional blockchain adoption. When protocols create compliant, regulated bridges between traditional finance dollars and on-chain DeFi yields, they basically unlock massive capital pools that, previously just couldn't participate. The third catalyst here is technical momentum. Price is reclaiming key levels, total value locked is crossing psychological milestones, and positive divergence from recent downtrends is all contributing to an improving technical structure that, attracts momentum traders and algorithmic strategies. Now let's talk about what could be the most significant development, not just for SUI but honestly for the entire DeFi ecosystem, Bitcoin becoming truly programmable and composable across multiple chains. Bitcoin has always been the largest cryptocurrency by market capitalization, representing, over $500 billion in value. But for most of its existence, Bitcoin has been basically inert from a DeFi perspective. You could hold it, you could transfer it, but you couldn't really do anything sophisticated with it, on-chain, without converting to wrapped versions. And that introduced centralization and counterparty risk. So, here's the thing. Bitcoin is undergoing a fundamental change right now. It's not just about moving cross-chain anymore. No, it's actually bringing its liquidity along in a way that's genuinely programmable and composable. The moment Bitcoin became truly composable across ecosystems, everything shifted. Now, let's talk about SUI. On this platform, tBTC unlocks capabilities that were either impossible or extremely limited before. With BTC-secured lending, you can borrow against your Bitcoin holdings without having to sell them. This means you maintain your Bitcoin exposure while still accessing liquidity. And here's the kicker. Liquidity provider strategies without swapping to stablecoins allow you to provide Bitcoin directly into liquidity pools. So, you're earning yield on your Bitcoin itself, rather than converting to other assets. Moving on to high-speed yield optimization. This leverages SUI's performance characteristics to execute complex strategies at speeds that slower chains just can't match. And over on Arbitrum, tBTC enables BTC-backed leverage and perpetual futures. It's pretty exciting stuff. So, this is massive for traders who want leveraged exposure to Bitcoin movements without leaving the DeFi ecosystem. Structured yield strategies become possible when you can program sophisticated logic around Bitcoin positions. And, capital-efficient liquidity provisioning means providing liquidity with better capital efficiency than traditional models. And this exact same utility is rolling out across Starknet Optimism and Ethereum mainnet. Each ecosystem unlocks unique DeFi primitives specifically powered by Bitcoin liquidity. This isn't just theoretical, this is production-ready infrastructure launching right now. Here's why this matters so profoundly. This isn't wrapped Bitcoin created purely for convenience. This is Bitcoin becoming a programmable financial engine that powers the entire DeFi ecosystem. When you have over $500 billion in Bitcoin market cap, and even a small percentage of that becomes actively deployed in DeFi strategies, you're talking about tens of billions in new liquidity flowing into protocols. Quick pause here. If you're starting to grasp why programmable Bitcoin liquidity could trigger the next DeFi explosion, do me a favor and smash that like button right now. And if you want to catch these structural shifts before they become obvious to retail, hit subscribe and turn on notifications. We're tracking the infrastructure builds that will define the next cycle. Alright, let's continue. Now let's discuss practical positioning because understanding narratives without actionable strategy leaves value on the table. Looking at SUI's 1-hour technical structure, we're seeing a tight range with price sitting just below resistance at 1.5784 to 1.5789. This is a critical inflection point. A rejection at this resistance could open downside targets at 1.4698 and potentially 1.4187 if momentum fails. However, if price sweeps below 1.4698, which would likely trigger stop losses and create capitulation, and then quickly rebounds with volume, that sweep and recover pattern often signals accumulation. A move back toward 1.5346 becomes highly probable after that type of liquidity grab. The bias remains bearish on the immediate time frame unless SUI breaks firmly above 1.5789 with conviction and volume. But here's the strategic consideration. When multiple fundamental catalysts converge, like 1 billion TVL reclaimed, Grayscale institutional product launch, real-world asset integration, and Bitcoin DeFi infrastructure going live, temporary technical weakness often represents strategic accumulation opportunities rather than reasons to avoid. With Trading Club Championship Phase 19 currently live on BitGet and SUI included as a trending eligible token, there's additional speculative trading activity creating volatility and volume. This creates both risk and opportunity depending on your time frame and strategy. For longer-term positioning, the convergence of institutional access through Grayscale fundamental utility through Bitcoin DeFi and real-world asset bridges suggests accumulation during weakness makes strategic sense. For shorter-term traders, respecting technical levels and managing risk around the 1.5789 resistance and 1.4698 support becomes critical. The key insight here is, don't let short-term technical chop distract you from the fundamental structural shifts that are happening. Grayscale, they don't launch products casually, and Bitcoin DeFi infrastructure, well, it doesn't get built overnight. Real-world asset protocols, they don't just bridge TradFi and DeFi without some extensive compliance work. When these catalysts all converge simultaneously, it's important to pay attention to accumulation zones rather than panic-selling weakness. That's what separates strategic positioning from emotional reaction. Let's zoom out and examine what this really means beyond just SUI price action. Bitcoin becoming programmable across multiple DeFi ecosystems, like SUI, Arbitrum, Starknet, Optimism, Ethereum, represents a fundamental expansion of what's possible in decentralized finance. For years, Bitcoin maximalists argued that Bitcoin should remain simple, focused purely on being digital gold and a store of value. Meanwhile, DeFi developed primarily on Ethereum and other smart contract platforms. What's happening now bridges that divide. Bitcoin holders can maintain their Bitcoin exposure. They don't need to sell or convert, while simultaneously accessing sophisticated DeFi strategies, yield opportunities, and liquidity provision. This unlocks Bitcoin's massive liquidity for productive use, rather than just sitting idle. The ecosystems that provide the best infrastructure for Bitcoin DeFi, the fastest execution, lowest fees, best user experience, and most sophisticated protocols, will capture disproportionate market share of this liquidity flow. SUI is positioning itself aggressively in this race, with tBTC integration, high-speed execution, and a growing DeFi primitive ecosystem. If Bitcoin DeFi captures even 5% of Bitcoin's market cap in active DeFi deployment, you're talking about $25 billion in new liquidity. That would dwarf many previous DeFi summers and fundamentally reshape the competitive landscape. So there you have it, crypto fam. SUI just reclaimed $1 billion in TVL while launching institutional access through Grayscale and becoming a central hub for the Bitcoin DeFi revolution. These catalysts don't converge accidentally. They represent strategic positioning that's been months in the making. While short-term technicals show some resistance, the fundamental structural shifts happening suggest this is early innings, not late-cycle exhaustion. When Bitcoin becomes truly programmable and institutions gain regulated access simultaneously, you're watching infrastructure for the next major cycle get built in real time. If this breakdown helped you understand why SUI's current setup could represent significant opportunity, show some appreciation by dropping a like on this video. Seriously, it helps more people discover this analysis. And subscribe to TJ Crypto World if you want to track Bitcoin DeFi and institutional adoption before they become mainstream narratives. I've also got a deep dive coming on 3 other chains: Positioning for Bitcoin DeFi dominance. You absolutely don't want to miss that comparison. Stay sharp, follow the infrastructure, not the hype, and remember, the best opportunities build quietly while everyone else chases noise. This is TJ signing off. Let's build generational wealth together.